All right, I've got 2 open spots for the SMT Premium newsletter. I will include my email address in the description below. Shoot me an email if you want to take one of those 2 spots. The newsletter is $75 monthly. All right, so in my last update a few days ago, I thought that probably the dollar looked like it may have completed an intermediate top and gold an intermediate bottom. Still a little too early to tell on the dollar, although I think if the Fed balks on Wednesday and fails to raise rates at least a quarter point, I think the dollar will crash, and that will be for sure the top in the intermediate dollar cycle. There's little doubt at this point that gold completed an intermediate cycle low. And originally I was expecting one more daily cycle here to come down and break this pivot, give us a slightly lower low. Let me clean this chart up just a bit. All right, because this decline hadn't really completed the normal parameters I'd like to see, and this is a weekly chart by the way, before I try and call an intermediate bottom. For one, the decline didn't hold below this 10-week moving average long enough to turn the moving average back down, and it didn't quite get oversold on the weekly RSI. So under normal conditions, I would have expected one more daily cycle that would left translate, come down and break this pivot and give us a lower low, push this RSI into an oversold condition, turn this weekly 10-week moving average down, and then we would get our bottom. However, sometimes there is a fundamental shift in the market that just supersedes cycles, and at that point you just have to accept that the normal tools aren't going to work in that specific situation, and that's what happened here with gold. We had an outbreak in a crisis in the banking system that put an early bottom in gold, and we got a swing last week. I was still willing to give it the benefit of the doubt last week, but this week there's no more confirmation I need to make this call that this was an intermediate bottom. Came a little bit earlier than we would expect normally, but probably exactly when we would expect it based on the unfolding crisis in the banking sector. People are trying to get their money out of the banks, out of the financial system, and in something they can hold in their hand and not at risk of losing. So people are they're actually gold, precious metals are actually the only thing that is going up right now. The dollar's not going up, stocks are not really going up. The rest of the CRB is at best basing. Natural gas is extremely oversold, but it's probably basing. So there's really only one place to run to hide from what's happening here, and that's precious metals. And the more capital and liquidity that flows out of those other markets that are either going down or are just in difficult sideways, choppy basing patterns where it's hard to make money, the more of that liquidity that comes out of those difficult sectors and goes into the one area where price is appreciating rapidly, the more violent this move is going to become. And I think also the suppression by the banking cartel has made this even worse. They have tried to prevent the natural upward bull move in the especially in gold and silver and the mining stocks. And so what typically happens is when a market is prevented from moving in its natural direction, when the manipulation or suppression breaks, you'll get an even more violent move in the direction of the fundamentals, and you can see that's exactly what has happened this past week. Now the mistake people are going to make is it's always the same mistake at every one of these. During the declining phase, investors become conditioned to expect frustration, losses, rallies don't pan out, And so that negative sentiment is still present during the beginning of an intermediate advance. So people tend to try and use the same strategies in this advancing phase that they were conditioned to use during the declining phase, and that is they want to take profits early. They're worried about pullbacks, losing gains, and so they, I tried to warn people during this phase is, don't screw this up. This is, I was pretty sure that this was the move out of the 8-year cycle low, and it would be a strong trending move, and you didn't want to try and use these same tactics of taking profits early that worked during this declining phase, during this advancing phase of a new 8-year cycle. Unfortunately, many people ignored me, and they missed big chunks of this move because we just didn't really get hardly any pullbacks during this move. And then the same thing will happen here is, we had this scary move down, and most people, anybody that was using cycles should have been expecting one more leg down. And then the banking crisis broke out, and the environment changed. We had to change our expectations 180 degrees and forget about that second leg down and just get in and then hang on. And we are, because this is such a powerful rally and capital or liquidity is coming out of all other sectors of the market and flowing into the one market where long positions are working, we're going to get more and more liquidity coming into this market. Average depositors at banks are taking their money out. They want to get out of the financial system. They're buying gold. So, all of the fundamentals are lined up in favor of this. We've got a short squeeze as the banking cartel is starting to get punished for their price suppression in the metals. So I think you want to take a longer term view here, not worry about minor pullbacks. There will be some along the way. I mean, there were a few small down weeks here, but if you were trying to time these small little pullbacks in this very strong trending move, cost people a lot of money. A lot of people missed huge chunks of this move because they were trying to play the advancing phase the same way they played the declining phase, and that just does not work. And now we've got all the fundamentals lined up. We've got a banking crisis. We got liquidity coming out of every other sector of the market going into metals. And we are setting up to retest these all-time highs very early in a new intermediate cycle. And I've noted this before, that breakouts that occur early in a cycle produce sustained moves. So we're only on this was only week 1 of a new intermediate cycle. This was the bottoming week because this was the lowest low right here. So this would have been the last week of the intermediate cycle. This was our swing and our first week of a new intermediate cycle. This should probably rally. I think this one rallied 13 weeks. I would expect this is going to rally for somewhere between 14 and 18 weeks. So you haven't missed anything. You don't have to worry about, any correction will be minor. It won't last very long. The odds are very high that this first daily cycle is going to test these all-time highs before this first daily cycle tops. And it may just slice right through there. And the banking crisis is not going to end anytime soon. And if the Fed fails to raise at least 25 basis points next week, I think the dollar is going to crash. And I think that could very well just, gold could slice right through this resistance zone next week and just keep going. So I think you need to take a big picture look at what's happening here. Not worry about minor corrections. Again, if you look at this first rally out of the 8-year cycle low, there were only just a few very small corrections, and they didn't last long. This rally has the potential to be even more violent due to the fundamentals that are now in place. So I think gold bugs have been waiting for years for the bubble phase in this bull market, and I think it's about to begin. It should begin once we get the breakout above these all-time highs, and then at that point I think you can throw technicals, sentiment, cycles, all of that out the window. You just hang on until you see every Tom, Dick, and Jane buying gold and silver and bragging about how much money they are making in their gold and silver trades, and that would be the red flag that you're getting close to the top of the bubble, and that's when it's time to sell your metals to your next door neighbor. So once again, I got a couple spots open for the SMT newsletter. Email me. You'll need to be ready to sign up. When I activate the sign up link, it only stays active for 1 hour. So if you're going to email me to join, you need to be ready to sign up within that hour before the link expires.